Hi there, welcome back to Market Fatafat. Let's keep it going with all the big buzzes in today's trade, and to do that, now on board we are being joined by Vaishali Parekh, Vice President Technical Research at Prabhudas Lilladher, and Janet continues to be with us. Vaishali, hi, good afternoon, and thanks so much for joining us on the show. Let's talk about your first stock. You picked out Apollo Hospitals for us on the chart. Last 1 month, it's been a flattish return. YTD, however, the stock has done a good 25 to 30% return. So tell us, what's the view coming ahead on this stock, and what are the next levels that you are spotting on the charts?
Very good afternoon. Yes, so the reason why I've chosen Apollo Hospital is because it has got into a trend, and on a near-term basis, it has given a breakout also. So I would say that yes, and volume is pretty decent. I think this stock is ready to go towards 7550 to 7600 levels, and the support is at around 7200. So which makes it a very attractive level to think of buying. Hence, I've chosen this stock.
Okay, thanks for the view coming in. Let's talk about a stock that has been ailing in trade not only today but for the past couple of trading sessions as well, and that's Avenue Supermarts, often called as D-Mart as well. Today it's on the back of in focus on the back of a Goldman Sachs note coming in, wherein Goldman Sachs has maintained their sell rating, also gone ahead and trimmed the target price to 3,425 from 4,000 earlier. So that's quite the steep cut coming in. They've cut their FY 25, 26 and 27 estimates by 4.2%, 6.2 and 6.1% respectively, accounting for lower revenue growth. They believe D-Mart is increasing price discounts to maintain competitive advantage, and they've increased discounts to roughly 25% over MRP in the month of December itself. D-Mart does not have any competitive advantage in the fresh food categories in urban areas according to them, and D-Mart's addressable market is only 1/5 of India's $500 million grocery market. Now they say that quick commerce expanding in the top 10 cities, but D-Mart's growth headroom is outside of these 10 cities. The pressure that the quick commerce companies have created on D-Mart seems to be getting to the company's volumes now, because a few days ago you also had a note coming in from Kotak Equities wherein they have also maintained their sell rating and cut the target price as well. From 3,650 earlier to 3,450. Today's City Note on Consumption also mentions D-Mart as one of the top investor sells. So lots of trouble coming in for D-Mart. Let's see how the company copes with the building pressure of quick commerce going ahead.
All right, but shifting focus back to the railway counters, and that's RailTel that is in focus on the back of the news flow, wherein the company has received the work order from Mahatma Phule Krishi Vidyapeeth for setting up a virtual classroom with all the equipment. They will be setting up the digital classroom with all necessary equipment, provision of the video wall, supply, installation of Aadhaar-based systems, and the amount is close to 11 crore rupees. Not a significant amount, but given the kind of momentum that we are seeing in the sector as a whole, including the other railway counters, RailTel is indeed in focus, and the stock is also holding up around 3.5% of gain right now.
Okay, so holding up pretty smartly in today's trade is RailTel. Janai, you've picked out the entire OMC's basket, the likes of HPCL, BPCL, IOC. Tell us what's the reason why you've picked out these stocks for us, because they seem to be holding up pretty well right now.
Well, definitely the whole OMC's pack is in focus, as Antique has come up with a report. Now what they believe is that all the AMCs, BPCL, HPCL and IOC, they are in a sweet spot currently at this point of time. Also, the auto fuel marketing margin currently stands at about rupees 9.8 per litre, which is at a higher territory is what they believe. Also, they're talking about the Singapore complex refining margins that has bounced back currently in this quarter, currently stands at about $5 per barrel Q2D basis versus 3.6 per barrel in Q2. On valuations front, they believe that the current valuation seems attractive on the back of dividend yields, which stands about 4.3 to 6.4%, and HPCL remains the preferred pick among the whole three OMCs, and that is why OMCs will be in focus. If you look at BPCL and HPCLs, both are trading above 1%.
So OMC is in focus on the back of this Antique note coming in, but let's talk about another sector that's in focus on the back of a brokerage note, and that's the entire cement space. Let's talk about what this note entails, because it's a note coming in by CLSA this morning, wherein they say that cement prices have increased by 10 to 30 rupees per bag in early December, implying pan-India Q3 prices that are up now 3.5% sequentially, but still down 5% on a year-on-year basis. After a weak October, there was a gradual volume recovery in the back half of November, and they remain positive about a demand rebound in the second half of FY25 and FY26 as well. They remain selective on the sector and relatively prefer Ultratech Cement versus its peers. Let's pull up Ultratech Cement because that stock has been doing very well since the start of trade today. They say that consensus estimates imply a 4% plus price increase in the second half of FY25 after assuming a sharp volume recovery and cost reduction helped by the operating leverage. There you have it. Ultratech Cement seems to have simmered down slightly because last time I checked, that stock was holding up with gains of more than 2.5%, but right now also 1.5% gain coming in on Ultratech. You have both Ambuja as well as ACC and the other cement players in focus as well on the back of the CLSA note coming in.
All right, then moving on, and let's talk about NTPC Green Energy because Jinay, the stock has been clearly in focus on the back of various news flow. But what's the latest when it comes to NTPC Green?
Well, as NTPC Green is in focus as company's arm, NTPC Green Energy Renewable has won an 500 megawatt solar power project. This is from SECI auction, which they emerged as a successful bidder in the e-reverse auction for the development of 2000 megawatts. Now, ISTS connected solar PV power project. This will include an establishment of energy storage systems, which is ESS, with a total capacity of 1000 megawatts and 4000 megawatts as well.
Okay, so that's the news flow on NTPC Green Energy. Vaishali, coming to you, IREDA is what you have picked out for us on the charts. On a year-to-date basis, this stock has more than doubled when it comes to its share price. Tell us if you see the momentum sustaining on the charts going ahead, because it's been a blockbuster year coming in for IREDA. However, the last 3 months, the stock seems to be under some sort of selling pressure. Tell us what's the outlook going ahead and what are the levels that you are spotting on the charts for IREDA.
We have seen a good pickup coming in almost all of the rail stocks. So IREDA is one of the stocks whereby I think it's getting into a trend. 210 would act as a support. There is a sign of a reversal. So my near-term target would come to around 240. And if it sustains above, it could go to even 260. And when you see the weekly chart, the overall trend is pretty good. So I think this is stock worth a look.
All right, worth a look when it comes to IREDA. But moving on then, and we caught up with Pidilite's MD designate Sudhanshu Vats on the sidelines of CII National FMCG Summit 2024 on the fundamental challenges the sector is facing today. Let's listen in to a slice of that conversation.
Medium to long term, the growth in India is going to be strong. There is no debate about that. I think the trajectory of the country, the way things are going, is all looking very good for every sector and FMCG sector as well. I think the second piece is also the second place to break it up is that the companies have to understand where the growth is lower and which segments, and try and address those growths through either innovation or price points, basically, which is to therefore embracing the bottom of the pyramid more wholeheartedly, or in certain cases, premiumization. Now, the third and the last piece I want to say is there is a section of India that is growing very fast, and that section of India is only going to expand. So whether those are about 60 million consumers today, and that number will go from 60 million to maybe 100 million in 2 to 3 years' time. How are we addressing that set of India, which has higher discretionary income, and how FMCG as a sector, we are getting a higher share of wallet from this section? So all of this will help us to sort of tackle and unlock growth.
Also, sir, I want to understand the concept of consumption, as we can see that there is a little bit of lower consumption, as we can see also because of the CPI is also increasing and the raw material costs are increasing. So as a managing director of a particular company, what challenges can we see? Will the FMCG companies come up with a rising price? What will be happening to the consumer consumptions? What is your view on that?
So this is a very company-specific question, to be fair, and therefore company to company it will vary depending on what each company wants to resort to. Some organization may want to pass on the price and therefore get manage if there is any inflationary pressure. Some organization may want to sort of use this occasion to get higher volume growth.
Okay, that's the word coming in from Sudhanshu. What's the MD designated Pidilite? But on that note, we'll slip into a very short break and once again keep it going with all the stocks that are buzzing in today's trade. Just on the other side of this short break, you stay tuned.
Welcome back to Market Parafara, and let's keep it going with all the buzzers. And Vaishali, I'm coming to you for your next stock, and that is Bajaj Finserv. Definitely, both the Bajaj twins are on the roll. But Vaishali, specifically for Bajaj Finserv, how are you looking at the charts and what should be the targets?
That's what I would say, that both these stocks, Bajaj Finance, Bajaj Finserv, they've really not participated. And now we are seeing that overall since 2 days, the full financial sector is showing an up move. So now Bajaj Finserv is the one which I've chosen because it's slowly after a rounding bottom, it's getting into a trend. So if it sustains about 1600 levels, I think this is quite likely to go towards 1750 to 1800. So it's a good trading bet.
Those are the levels Vaishali is spotting on Bajaj Finserv on the upside, looking good on the charts for now. Let's shift focus, talk about Infosys. This stock is in focus on the back of a brokerage note coming in from Axis Capital, where they've upgraded this stock to an add rating from a reduced rating. Also revised its target price upwards to 2,050 rupees per share from the earlier 1,790 rupees per share. They believe Infosys is set to regain Tier 1 growth mantle in FY26. They have raised the target PER to 26 times from 23 times, and margins have seen some stability despite large deal ramp-ups aided by execution-related projects from Project Maximus. This is what Axis Capital is flagging off for Infosys. A very bullish note coming in for Infosys, a hike in the rating as well as the target price coming in. On the back of that, this stock is holding up pretty smartly, and in fact rather eating the Nifty also today with a 1% gain almost coming in on this stock.
Alright, but moving on, then Vaishali, once again coming to you, and that is Birlasoft is the counter that you are tracking. Tell us more about this one.
IT sector on the whole has been doing very well, and now I'm looking at Birlasoft because it's just coming out of its consolidation, a recent consolidation, what we were seeing at around 600, 590 to 600 levels. Currently it's at 614. So today's candle also shows a lot of strength. I would say a stop loss of 590 and the stock can go towards 660 to 680.
Alright then, that's about Birlasoft, but moving on then, and let's also talk about BHEL, because that's the stock. What you will see is that one of the top gainers, and especially it's more than 2% gain is what we are seeing right now. And today actually JM Financial has come out with its 2025 top bets, and BHEL is actually topping the charts because the target price that they have said is 371 rupees. That's more than 40% upside is what they're still penciling in. What they're highlighting is that they expect the revenue and EBITDA to grow at a CAGR of 30 and 103% throughout FY24 and 27, and they do have a buy rating on this particular counter. They are saying that currently there's 31 gigawatts of thermal power plant that are under construction, and government is in a free fighting mode to control the possible power deficit in FY26 onwards, and is targeting to add 93 gigawatts of thermal power plants by FY32. Not just that, BHEL has already received thermal power projects during FY24 and during FY25 as well. It's more than 10,000 megawatts of projects that are already there. There are a lot many tenders that are opening up, and hence BHEL could be one of the key beneficiaries, and hence JM Financial has come out with such a bullish call, and the stock is reacting to that as well.
Okay, very positive call coming in for BHEL. That stock also holding up well, but let's keep it going with brokerage impacts and brokerage reactions coming in. Jina, you picked out delivery also on the back of a brokerage note. Tell us what the note entails, and tell us why delivery is seeing some slight bit of pressure as well. So tell us what's been happening.
Well, definitely Delivery had its management meet, and we have a note by Prabhudas Leeladhar where they've assigned a hold rating and given the target price of 361. Now about segment wise, they say that the B2C express parcel segment that is facing some kind of headwinds, and this is mainly because of the volume growth which remains under pressure since last 3 quarters due to the rising in sourcing by Meesho. If we talk about other segments, then PTL Express business that is on the growth path, which is mainly led by the customer additions, and FTL market that remains highly unorganized, and due to which the margins improvement that can be a challenge for the company. They're expecting the EBITDA margins to improve 8.1% in FY27 versus 7.4% what we saw in FY24. Now, while rising in sources has impacted its 3PL volumes, D2C, omnichannel and social commerce, these three segments are expected to expand the overall market pie for the company. And if you look at the stock price in last 3 days, the company did perform about 4%. However, today it's trading in a bit of some pressure.
Okay, so some pressure build up being seen on delivery right now. Thanks, Janay, for that. Let's talk about another stock in focus, and yet again on the back of a brokerage note is Wipro. This note is coming in from Investec, where they've reiterated their sell rating with a target price of 290. However, the stock is doing decently well for itself despite the sell call coming in just 0.2% higher thereabouts is where the stock is right now. Investec expects Wipro to improve capital allocation and shareholder payouts. The stock could see limited downside from where it is, considering Wipro has a US $6.1 billion in cash. Likely that the new policy could be in line with peers is what Investec is flagging off for Wipro. They've retained their sell rating. However, the commentary and the outlook is slightly positive going ahead on Wipro. And on the back of that, the stock is holding up mildly okay right now, but nonetheless in the green as we speak.
Alright, moving on, and let's put the spotlight on Exide Industries, because Vaishali, what I see is in the past 3 days the stock is in a bit of a consolidation mood. But do you expect this to break through this consolidation phase anytime soon?
Looks like, because yes, it is sustaining about at the 200-day moving average, and I think once we see in fact sometime back we saw some momentum setting in, but again it's just fizzled out. But let's wait for this to move past 478 levels. So once we see that and sustaining above that, it's very likely that it will get into a trend and look for a target of 535 to 540.
Okay, 535 to 540 on the upside for Exide. Janay, you've picked out PB Fintech for us as well. Tell us what's the news flow. Why is the stock in focus today?
Well, definitely PB Fintech is in focus as HSBC have initiated a buy rating with a target price of 25.50. Now, first, if we talk about the company, then it operates India's largest insurance marketplace for India. Also, if we talk about more about the company, then the substantial operating leverage over FY 25 to 28 is expected to drive about a 66% PET CAGR versus a 27% revenue CAGR. HSBC also forecast EBITDA margin to improve to 19% by FY 28 estimates, and that is why PB Fintech is in focus. If we talk about stock performance, the stock has moved about 13% so far this month. It's trading about all-time high levels, but currently under some pressure.
And that's about PB Fintech. But with this, I would like to thank Jinay as well as Vaishali and Nagraj earlier for joining us today and helping all our viewers highlight the buzzers in trade right now. But with this, viewers, me and Snehi will also take your leave, but you don't go, because up next is Mutual Fund Simple Hai, a segment from our ongoing campaign Mutual Fund Sahi Hai presents Smart Nivesh. Sahi Nivesh, and this is being partnered by Times Network. This segment is focused on debunking common myths about mutual funds and true to tradition. We are bringing you another myth from the world of mutual funds. So the myth we are debunking is mutual funds are only for experts. Is it a fact or just another misconception? Let's find out.
Hello and welcome to Mutual Fund Sahi Hai presents Smart Nivesh Sahi Nivesh, partnered by Times Network. Now, in this special segment, we're going to be looking at some important statements about mutual funds, and we're going to find out whether those statements are myths or whether they are facts. And this special segment is called Mutual Fund Simple Hai. And the statement that we're going to be talking about today is mutual funds are for experts. Now, first up, we went around the country. We spoke to the citizens of this country. We got their thoughts, their views on this topic. So let's hear what they have to say.
नहीं, हर कोई कर सकता है, इसे कॉमन लोग यूज़ कर सकते हैं, करना चाहिए।
नो फॉर एवरीवन।
जी नहीं, ऐसा बिल्कुल नहीं है, इसमें कोई भी इन्वेस्ट कर सकता है।
नो इट्स फॉर एवरीबॉडी एक्चुअली, बट एटलीस्ट सम अमाउंट ऑफ अवेयरनेस शुड बी देयर।
नो मैम, इसे ऑल सब यूज़ कर सकते हैं।
नहीं, सबके लिए उसे ऐसा भी नहीं है कि एक्सपर्ट्स के लिए होते, कोई और सीख के करना चाहिए, वैसे भी थोड़ा बहुत नॉलेज हो तो वो भी कर सकता है।
ये सबके लिए होते हैं।
नो दे आर फॉर एवरीबॉडी, दे आर एक्सपर्ट्स नाउ एवरीबॉडी।
नहीं, इसमें कोई भी इन्वेस्ट कर सकता है।
नहीं, म्यूचुअल फंड सबके लिए ही होता है, नॉर्मल लोगों के लिए
नहीं, ये सभी के लिए होता है, इजी पड़ता है तो।
All right, well, you heard what the Janta has to say. But joining me in studio right now is Harsh Rungta. He's the founder of Fee Only Investment Advisors. Harsh, sir, your thoughts on this statement that mutual funds are for experts. Is it a myth? Is it a fact? What's your take?
In fact, as you started out, mutual funds are very simple, okay? And it is a myth that you need to be an expert to be able to invest in mutual funds. Whether you take the process or whether you take, choosing mutual funds, I think everything is simple. As far as process is concerned, you can invest as low as 500 rupees. You want to do recurring payments, it will come and hit your bank account. You want to do daily, you can do that daily with no cost. It is really, really simple. Small amounts you can do. More importantly, you can choose the kind of investment that you want. You want to do fixed deposit kind of instrument, that kind of mutual fund schemes are available. You can choose to invest in the markets, those kind of schemes, equity markets, those kind of schemes are available. International market schemes are available. The choice is there. The choice can be made simple. There are very simple choices that beginners can look at. So very clearly, you don't have to be an expert to be able to invest in mutual funds. In fact, what happens is that because many investors pool their small money, they are able to hire the experts in the mutual fund to invest on their behalf. So I think what this does is that you don't have to be an expert, but you can actually hire an expert.
So fantastic. So that helps a lot because, sir, it's important to understand that you can be a newbie, a new investor, a beginner investor, but can make the most of the right mutual fund, the most ideal mutual fund for yourself, which you can speak to an advisor who can guide you on it. But the beauty is that while we might not be the experts, there are experts in those mutual funds who will manage that money well. Well, that's one more myth that's been busted here on Mutual Fund Simple Hai as part of Mutual Fund Sahi Hai presents Smart Nivesh, Sahi Nivesh, partnered by Times Network. Stay tuned to the channel for many such more segments where we'll be busting more myths. Thank you so much for watching.
If you like this video, then like, share and subscribe to ET Now.